morning everybody, it's Christian from Serene Education with the 4 majors and analysis update for the 7th of June 2012. Hi guys, just going to be looking over the 4 majors this morning, starting with the Euro against US dollar on our daily. Let's have a look and see what happened yesterday. A lot of momentum to the upside, and in doing so pretty much breaking prior hesitation area here around the 1250. You notice it was a slight hesitation area, break lower and then a pullback, and that pullback consolidated for 2 days under this 1250 before we saw yesterday's candle to the upside, nudging higher, and in doing so looking like it was going to retest this 1265.50 mark, which happened to be a major support and resistance level going back a number of years. In fact, if I just put this in, you'll be able to see exactly what it is that I see. There we go. Major one here back in Jan of this year. We had a nice bounce to the upside. However, if you pull this back, you can see way back in August of September of 2010 we had a nice hesitation area here as well. So price breaking through that just recently and moving lower with a lot of momentum. However, if you look at this potential pullback and this move to the downside and the pullback, this is obviously a break lower from that. So if you take this to the tops here that we saw in Feb and let it go, you can see that that 50% level is in and around that pullback level that is roughly between the 1265 and 12700, which happens to be coinciding with this major support and resistance level here. Price did test 61.8, and as I mentioned yesterday in my analysis, I wanted to see price actually finding resistance at this level here to give us an indication that we should be looking for further downside movement. This, however, wasn't the case, and we saw this bullish candle to the upside, and in doing so now it's trading above the 61.8. so ideally we should be looking potentially back up towards this 50% line here between the 1265 and 1270 as our next potential target. You can see already that we had a blue arrow yesterday, and I can confirm that you'll probably look at the hourly and 4 hour, or 30 minutes hourly and 4 hour, you'll probably potentially start seeing bullish upside momentum for this pair. So if you look at just the recent trend, notice that it's been breached. This little trend line over here, this candle yesterday really breaking this trend line now and moving higher. So if there's going to be any movement, then surely you should be looking for something to the top side, roughly towards the 1265. But there happens to be a major resistance level above us, so it'll be one to watch. Ideally, if this is going to be a positive momentum move to the upside, I'd ideally like to see it trading above the 12700. Getting above that would definitely confirm that we should be looking for potential upside movement for the foreseeable future, as this is a major support and prior is support, and we're trading below it. It's quite a negative signal. So getting it back above the 12700 would definitely confirm that we're looking for near-term potential upside being far more in favor. Overall downside trend is, you can quite clearly see, way off there towards the 1300 mark, which is where we saw that major break to the downside. Lower swings, lower swing prices way up here. So the major trend is way up here. It would have to break right above these areas here at 31, 32, in fact way above 133 in order to get above the institutional moving average to be classified as bullish overall. That downtrend is in play, so as long as that maintains in play, then we're still very much on a negative trend. However, we are seeing a noticeable pullback recently. That pullback over here is quite closely tied with this 1265, 12700. So we want to see a break above that area there in order to see any further opportunities to the upside, with 38.2 being a potential target to 12900, and ask me back up towards here towards the 1300, which we had that major support and resistance breach just recently, which saw us through a lot of support through the first part of this year. So giving anything back, I'd be quite hesitant to take a trade at the moment because it's quite close to this very strong prior support, which could be potentially another resistance level. Notice the CTC is still very much in our favor. We only have one part of our 4-part strategy, and that is the blue arrow. So I'd be very hesitant for this, looking for any intraday trades at the moment. News-wise, is anything out here? We've got the Spanish 10-year bond auction. That's going to be quite an interesting one because Spain is in a lot of pain at the moment. So it'll be interesting to see how much the actual auction brings through on the bonds, 10-year bonds. Then we have the French ones, also not looking all that great. We know that a lot of the French banks were downgraded by Moody, so that's going to be quite interesting. However, we go into this afternoon session and we got those all-important official bank rates for sterling, which I'll talk about just more later. But regarding the European section, we have the Spanish bonds sale tentative today, all of today. They could happen this morning, it could happen this afternoon, so that's one to watch because it'll definitely show us what's happening, especially in Spain. which is another area of concern, especially after what happened with Greece. Recently, Spain has also shown a lot of negativity in its markets. Next up is sterling. Let's have a look. Yesterday's movement to the upside also quite bullish after the beige book results yesterday on the US session, looking all promising. However, we go back to sterling, and today we have interest rates announcements this afternoon. If I'm not mistaken, we have interest rates announcements at 12 afternoon GMT. So why should we be worried about the interest rates? Well, it was only just recently the IMF suggested that in order to keep things moving in the right direction for Eurozone, that they wanted to see Britain reduce its interest rates from the current level of 0.5% down to 0.25%. Inflation is another issue that if you do keep your interest rates low for a long period of time, your inflation can get ahead of you, and they're worried about the inflation levels in the UK, which would hinder any long-term progress for both sterling as well as the Eurozone. So that was just an idea put forward. It'll be interesting to see if Merv King and his sidekicks actually do decide to go with that interest rate change. It could both be positive and a negative aspect to the overall trend. So, however, if I take you back to a weekly chart for this pair, I just want to show you something that's really, really interesting. The all-time low here in 2009 to the highs that we saw here in August, September of 2009. If I just do a fib retracement on that, you can quite clearly see there are a number of, there's a 23.8, the 38.2, and there's a 50% line. Now this 50% line, and you look where price is trading on the hard right edge, that 50% line on the hard right edge, notice how much support this 50% line acted for price action since 2010, August 2010, right through to current day. Notice how strong the support was at 15,300. So psychologically, we saw last week really trading into that level, but so this week pretty much giving back some of that profit, and that's taking back a noticeable bounce, and this will primarily be because profit's been taken. Those long-term traders looking at weekly chart, monthly chart data would obviously see this as a potential trade or target one, and they've taken profit from that. It'll be interesting to see how far this pullback, or this bounce, does take us. We had a noticeable one here, another one here back in September last year, another one before 2010, December 2010. So noticeable pullbacks. It'll be interesting to see how far. I mean, ideally, if there was a genuine pullback, then we should be looking at 15,700. A noticeable 15,700 has been a price support and resistance level on a weekly time frame. You can quite clearly see hesitation along this area here at 15,700. So ideally, we could look at that potentially as our next target, or what you could do is take the highs that we saw here to these lows we saw in June, candle here, and you can see the 23.6 has at 15,500 has been tested, and we've had a pullback since. So ideally, if we want to see any further pullbacks, then 15,500 on our daily would need to be broken, and we need to see price trading above. And if that was the case, then ultimately 23 we look at the 38.2, which take us back to 1565, back into this consolidative range here between this major support and resistance level here at the 38.2, which would be roughly around the 15,650 mark. So if I move this down to a daily, hopefully those lines would have stuck, and there we go. You can see the highs over here, for example. There we go. So 23.6 here at 15,500, noticeable resistance, and then we have the 38.2, which bring us back to price support and resistance levels that we saw just recently. Noticeable support and resistance through here. So you can see how price, all pretty much all these fib retracement levels, all pretty much working together. The downside trend is in play as we speak. Okay, that's another one over here. So you can see the CTC very much negative sentiment. Moving average all above price, everything's looking fantastic. Yes, we've had a psychological bounce at 15,300, and as long as price is trading above that, the more likelihood is we're going to see price reversing to the upside because of that weekly long-term support area found at 15,300. So if we're going to see any momentum to the upside in order to gain or to look to trade higher, then we need to see this 15,500 being broken quite soon. If not, then we could go into this consolidative range. Okay, we could go sideways for a number of weeks, days, you name it. If it sticks between a very strong support weekly and this short-term resistance level here, then we could see price just going sideways. Ideally, long-term, if this is to maintain negative sentiment overall, then we need to see this 5300 being breached quite soon. And if it did do that, then you could see what the stats would show long-term. If we saw a break of a very strong support, which is the case at 15300, then we could see a very negative move sentiment-wise to the downside for that on our long-term. Institution traders, etc., like that, who are trading weekly charts, monthly charts, etc., like that, would look at that as a very negative outlook, and the sentiment would really favor shorts, and that momentum would come quite quickly. So very important. If we do see a break of 15300, then we might see a very strong negative trend to the downside. The more it goes sideways, the more likely is we can see price trading higher. First rule, no, if it is going to trade higher, or we're going to see any further sentiment, it needs to break above 15500. Fails to, then we're just going to consolidate between these two ranges here. Intraday, you might be able to find trades, but it could be quite volatile. Today's announcements, the official bank rate or interest rates for Great Britain, if we do see a change and Merv King comes up with 0.25, that will definitely move the market. So watch it very closely. Rather stand aside, rather get a definite confirmation. If there is a definite confirmation, it could be a bearish engulfing or it could be a bullish engulfing. And either way, it would definitely give a signal as to where price is likely to go to for the remainder of this week. Next up is Swiss franc. Here we've seen a stronger pullback than we first thought. And if you see where price has been trading, okay, you'll notice that the all-time low over here to the high, we saw price breaking straight through that recently. Here at the hard right edge, you can see price really into this area here at 960. We saw some hesitation as we went into 960. However, since then we saw a break, indecision candle, and then a shooting star, and then we saw price revert to the downside. Then we saw 2 consecutive days of hesitation at this level here, and we were thinking, well, if this is going to be a true support, then we want to see a nice bullish engulfing candle at 960 to see any further upside movement to be genuine support movements. You can see here the upside trend swing highs, trend line, etc., like that on the intermediate time frame. That is what we required from price in order to give us a further indication that we're looking for upside movement. That failed to do that because of yesterday's candle that generated a negative outlook. Bearish engulfing, quite a negative down move back towards below the 960. CTC is still very much blue. That's because we're still trading above all the moving averages. Okay, but we do have the first part of a negative setup. We have our red arrow. And that red arrow is now genuine on this bearish candle that's taken us back below a major prior resistance level at 960. The longer now it finds resistance now at 960 or trades under the underside of 960, the more likely is we're going to see price reverting to the downside. Now we want to know where. So you could always just take the low, the start of this upside trend, to the high that we saw a couple of days ago, and now you can plot your Fib retracements. It gives you an idea where we could look potentially for trades to take us. You can see the 23.6 here at 960, bang on 960 was broken, so ideally we could look at 38.2 here, back towards a 20 period moving average at 950 as our next potential target. If it fails to find if it fails to pull back above 960, then we should be targeting 38.2 as our first target. Break below that would take us back to 50%, which is roughly around the 940 mark. A break below that would see the 61.8 here at 935 or 933 in particular, back to price support and resistance levels noticeably here. This tweezer top back in March, mid-March, would definitely be our next potential target, or third target to the downside. So very important. You can see price in the Asian session not really giving much to the market. Then we're going into the European session. We're seeing a slight pullback. That's probably going to be a potential pullback to the underside. So prior, over here, how can I explain it? Over here, resistance, breakout. So prior resistance becomes a new support, which happened over here, but it failed to take off. It would be the same over here. A prior support could be a new resistance level, and we could see price reverting to the downside in the direction of the overall trend. So you can see this short-term trend over here, for example. This negative candle has now formed a lower swing, and that lower swing has taken us below a major support and resistance level, and now the trend could ultimately be this side. So we could see price trading higher today, but failing at the underside of 960, and then we see the selling coming into it at the end of the US session or going into the remainder of this week, which would take us down to 38.2, the 50, etc. The other outlook is price to revert back to the upside and be trading on the other side of 960, which would look positive, because the CTC is still telling us that we're still should be looking for positive sentiment. We would only start to look for negative sentiment once this area here at 38.2 has been breached. Last pair of the day is the US dollar Japanese yen. Okay, and what we've seen recently, we've seen a major move to the upside. This is our third consecutive movement, bullish movement to the upside on this pair, and taking us back above the institution moving average, which happens to be quite a bullish signal. The overall downside trend for this pair, you can see noticeably we've been in a downside trend for quite some time. That has also been breached. So the intermediate downside trend is looking like we could see positive potential. However, we have that 80, and the 80 isn't too far away. Price is trading at maybe 80 is a very strong price support and resistance level. This takes us back a number of months. We broke above that just recently, well, back in Feb, when we had this massive move to the upside. We saw hesitation, break, support, and then we saw the momentum climb even higher to 61.8, and then well over to 261.8 before we saw the 8400, which happened to be a major support and resistance level in the past, catch up with price, and it dragged price to the downside. Since then, we've seen a move back to the downside, and we thought, well, the closer we head towards a major support, or this is the breakout area, we could see potential for price to actually find support around this area above the 80, and then we could see that bounce and look for the US dollar to maintain these highs against the yen. That failed to materialize. We went into this consolidation area here, and price did nothing for a long period of time before we saw this bearish engulfing candle that really gave us a signal that sentiment was still looking negative. This candle over here, if I can just zoom so you guys can see it, over here engulfing all of this indecision, literally 2 weeks of indecision at this major support and resistance level, and in doing so took price below. So you saw more happening below the 80 than above it subsequently, and then we saw the move to the downside occur. You can see the lows over here to this high, so you can project where potential target could have been taken, or target 1s, 2s, 3s. 23.6 would have been a target, 38.2 would have been a target, the 50% line, which goes smack bang with the 80, would have been another target, 61.8 would have been a target, and ultimately down towards the 78.6 would have been the overall one below the 61.8, and I'll just show you that. Kissed it, and then we've seen a bounce higher. Ideally, we wanted to see price trading below the 77.50, would definitely confirm that we're back into this consolidative range that we've seen on this pair for a number of months. Notice there's a consolidative range over here, for example, between the 75.50 and the 78 here. Okay, you can see that price bounced at 78 and moved higher, so you can see that consolidation range being tested, the upside of it. Let me just make this all so you can see exactly what it is I'm saying. See this consolidative range. A lot of intervention from the Japanese government in between all this, but overall we saw a nice break on those fantastic figures we had on non-farm payroll back in the first Friday of February. So the institution moving average is still below price, so long term still looking positive, and as long as it maintains that level, then we should be looking for upside, or positive sentiment upside. However, we're still trading below a major resistance level, price support and resistance here at 80. It would have to get above that in order to look potentially positive long term. Near term still looking very, very negative because we're seeing lower swings, and our CTC is telling us that term this is still very bearish. We're going into an era of consolidation, a lot of hesitation in between the 79 and 80. So if we're looking for any potential trades, we would have to see a break of 7900 and the institution to look for potentially for that negative sentiment to still waiver a trade to at least 78.6 here, just above the 77.50 mark. Other scenario would be a clear break above 80. I'd be more hesitant to take a trade until I saw a genuine break above 80 and close, or break below the 79 and close. So at the moment now this is trading a no man's zone because it's just so close to this area of prior support and resistance, and we're trading above a noticeable bounce higher than the 61.8. So at the moment now I'm staying away from this. Yes, everything I'm looking for that negative sentiment candle to come through to show me that market sentiment still favors downside. Otherwise we'd have to see a clear break bullish with bullish sentiment to the upside above 80 to give us a clear indication that we should be looking for a change in market sentiment near term, and that would definitely change things as the longer we go into the long term. So that's it, guys. That's my trading analysis for the day. I hope you have a fantastic trading day. Just please be aware of those news announcements today. We have sterling this afternoon. We have the Spanish bonds 10-year bond auction. That's going to be very, very important for the European sector. If they don't get the prices that they thought they would get for these bonds, that could be quite detrimental to the Spanish economy, or it is, but it'll just give us an outlook of what the overall trend is like for the Spanish economy on those 10-year bonds figures. The other one is to look at the official bank rate for sterling. IMF wanted Merv King and its sidekicks to actually change that from the current figure of 0.5 or 0.5% down to 0.25%, so that could be quite interesting. We also have the rate statement to follow that. Then we have unemployment claims in the US at 1:30 GMT. Then we have Mr. Bernanke talking for the US market at 3 p.m. GMT this afternoon. So there's a lot of news. The unemployment claims are quite interesting. Expecting a lesser figure. Unemployment, which is great. If it comes less than that, then we could see definitely for the US dollar gaining a bit of strength. It could be interesting to see what Bernanke says at 3 p.m. this afternoon. So there's going to be quite a lot of speculative trading between these ranges or between these time frames. So I'd be quite hesitant to look at price action where US dollar is trading in comparison to that pair that you're looking at. If it's trending quite close to a major support and resistance, it'd be far better just to back off and see what price does after the news announcement has taken place. Other than that, keep it simple, back up your strategy with sound money management, and just keep it simple, guys. Make sure you plot your major support and resistance levels. Look and see price candles. Candles will dictate price action. You look at the sentiment candle or the wicks. Does the candle have a lot of wick? Does it have less wick? Etc. etc. It all builds a picture for you. You just got to be patient enough to actually see that and to plan your next move on that analysis. Otherwise, have a fantastic day, and I'll see you first thing tomorrow morning. Until then, trade serenely.